Hello and welcome to The World Today on CGTN, come to you live from Beijing. I'm Su Yuting. China is holding a news conference on its latest financial policies to stabilize the market. Officials from the People's Bank of China, the National Financial Regulatory Administration, and the China Securities Regulatory Commission will brief the media and take questions.
This press conference held by the State Council Information Office. Today we are glad to have invited Mr. Pan Gongsheng, Governor of the People's Bank of China, PBC, Mr. Li Yunze, Minister of the National Financial Regulatory Administration, NFRA, and Mr. Wu Qing, Chairman of the China Securities Regulatory Commission, CSRC, to brief you on the financial policy package to keep market and expectations stable and answer questions. I will now give the floor to Mr. Pan. Friends from the press, good morning. It is a great pleasure to meet you again. I thank all of you for your long-term interest in and support for the reform and development of China's financial sector and the work of the PBC. Since the beginning of this year, the PBC has closely followed the instructions of the Central Economic Work Conference and the Government Work Report, implemented an appropriately accommodative monetary policy, strengthened counter-cyclical adjustment, combined various monetary policy instruments, served the high-quality development of the real economy, and created a sound financial and monetary environment for the sustained recovery and growth of the economy. First of all, since the beginning of this year, the various macro-financial data are performing rather well in terms of money and credit. The numbers are up, prices down, and structures are improved. That's the general trend. At the end of Q1, aggregate financing grew 8.4% year-on-year, loans up 7.4% year-on-year. But if you exclude the factor of local government special bond replacement program, then the year-on-year growth of loans was over 8%. Broad money supply, or M2, continued its steady growth at around 7%, markedly higher than the growth of the nominal economic growth. Social financing cost remains low. Inclusive loans to micro and small enterprises, mid to long-term loans to manufacturing, and loans to sci-tech SMEs grow faster than average, and the structure of credit continues to improve. The financial market had positive performance in Q1. The stock market operated steadily with vibrant transactions. Shanghai Composite Index kept at around 3,300. The bond market carried out self-reactivation because of boosting economic confidence, and onshore and offshore RMB exchange rate against the US dollar appreciated a little bit by around 1% from the end of last year. Since the beginning of April, despite strong external shocks, our financial system remains robust, and the financial market demonstrated strong resilience. The Shanghai Composite Index, after its decline on April the 7th, bounced back and stabilized, and the 10-year Treasury bond yield hovered at for around 1.65%. RMB exchange rate against the US dollar, after slight depreciation, came back to around 7.23 yuan. The global economy now is filled with uncertainty, heightened economic fragmentation, and trade tensions, which disrupted global industrial and supply chains and triggered turbulence in the financial markets, and also weakened the momentum for global growth. A while ago, I was in Washington, D.C. for the spring meeting of the IMF and World Bank. At the meeting, central bankers and heads of international organizations expressed concern over this. The PBC will carefully implement the decisions and instructions of the CPC Central Committee, promote high-quality economic development, promote high-level opening up, and actively participate in international financial governance and cooperation, and safeguard the rules-based international economic and financial order. At the same time, we will work both in terms of the opening up and the security of the financial sector, explore the central bank's role in macroprudential management and financial stability, and keep China's forex, bond, and stock markets stable. In order to implement the requirements of the April 25th Political Bureau meeting, which gave a detailed analysis of the current economic situation, continue to implement the appropriately accommodative monetary policy, and promote high-quality economic development, the PBC will intensify macro regulation and roll out 10 measures in 3 categories as a package. First, quantitative policies. Through RRR cuts, we will increase mid- to long-term liquidity supply to keep ample liquidity on the market. Second, price policies. We will lower policy interest rate and the interest rates of structural monetary policy instruments, which is the interest rates paid by commercial banks to central banks through reloan programs, and we will adjust and cut provident fund loan interest rates. And third, structural policies. We will create and implement the structural monetary policy instruments, support sci-tech innovation, boosting consumption and inclusive finance. So in total, in these 3 categories, there are 10 specific measures. First, lower the RRR by 0.5 percentage points, which will release around 1 trillion yuan of long-term liquidity to the market. Second, improve the RRR system. We will incrementally lower the RRR for automobile finance companies and financial lease companies from the current 5% to 0%. Third, we will lower the policy interest rate by 0.1 percentage point, which means to lower the open market 7-day reverse repos interest rate from the current 1.5% to 1.4%, which is estimated to drive LPR down by around 0.1 percentage point. Fourth, lower the interest rates of structural monetary policy instruments by 0.25 percentage points, which includes the interest rates of various special purpose structural facilities, the relending to support agriculture and small and micro enterprises, which will be brought down from the current 1.75% to 1.5%. These are funds provided by the central bank to commercial banks. And the interest rate of PSL will be brought down from 2.25% to 2%. PSL is provided by central banks to commercial banks. Fifth, cut the interest rate for provident fund loans by 0.25 percentage points. The 5-year loan interest rate of first homes will be brought down from 2.85% to 2.6%, and the interest rate of other mortgages will be adjusted accordingly. Sixth, we will add 300 billion yuan of real loans to support sci-tech innovation and technological transformation. That will bring the current 500 billion to 800 billion yuan. Which will continue to support the policy of large-scale equipment upgrading and consumer goods trade-in programs. Seventh, we will establish a relending facility for services, consumption, and elderly care, totaling 500 billion yuan. Eighth, we will add 300 billion yuan of real loans to support agriculture and micro and small enterprises and synergize with the policies of cutting relevant facility interest rates, which will support banks in expanding their credit issuance to agriculture, small and micro enterprises and private enterprises. Ninth, we will improve the two monetary policy instruments supporting the financial markets, which means we will combine the 500 billion yuan swap facility for securities, funds and insurance companies and the 300 billion yuan real loan program to support share buybacks and increased holdings. That will bring the total volume to 800 billion yuan. 10th, we will create a SciTech innovation bond risk sharing facility. The central bank will provide low-cost real loan funds, which can be used to buy SciTech innovation bonds, and together with local governments and market-based credit enhancement institutions, and through diverse credit enhancement measures such as joint guarantee to share the default loss risks of bonds. We will support SciTech innovation companies and equity investment institutions in issuing low-cost, long-term SciTech innovation bonds financing. All these 10 measures will be published on the website of the PBC, and we will implement them. Going forward, the PBC will continue to follow the instructions of the CPC Central Committee and the State Council, implement the appropriately accommodative monetary policy, and in light of the domestic and international financial and economic situations and financial markets, continue our monetary policy regulation and strengthen our coordination and synergy with fiscal policies and promote high-quality development of the economy. Thank you. Thank you for your opening remarks. We now invite our next speaker.
Friends from the media, good morning. It's a great pleasure to meet you again and take your questions. First, on behalf of the NFRA, I wish to thank you for your long-term support for our work in the financial regulatory sector. Since the beginning of this year, the NFRA has honestly implemented the decisions and instructions by the Party Central Committee and the State Council, implemented the guiding principles of the April 25th Politburo Conference. Keeping in mind the worst scenarios, we have stepped up and expanded policy measures, actively responded to external impacts, and our work has made solid progress. First, the financial operation has remained generally stable. Currently, the businesses of banking and insurance institutions are carried out in an orderly way. Major regulatory indicators remain in a healthy range. Large financial institutions are stable, playing a significant role as stabilizers. The reform and risk diffusing of small and medium financial institutions have made important progress. From the first 4 months of this year, the capital adequacy ratio of banks and the solvency ratio of insurance companies remain stable. The non-performing loan ratio dropped by 0.1 percentage point, and provision coverage ratio grew by 10 percentage points year on year. It could be said that the safety cushion has become thicker. Second, the regulatory policies continue to take effect. We have strengthened the guiding role of regulation, accelerated regulatory system improvement, and revised and adopted systems in terms of corporate governance, regulatory rating, and consumer protection. We have formulated opinions on the high-quality development of the banking, insurance, and asset management industries, and enhanced the professionalized and specialized development capability. We have guided the industry to further reduce cost and improve efficiency, improved capital replenishment mechanisms, and in terms of large commercial banks, the capital replenish are picking up speed, and major insurance companies are on the agenda. These measures will further enhance the resilience of the financial system and the capability to serve high-quality development. Third, the quality and effectiveness have been enhanced. We have formulated special implementation plans on the major areas of finance and adopted financial policies supporting consumption and foreign trade, and step up our support to major areas and equipment upgrading and consumer goods trade-in programs. For the first 4 months, the banking and insurance industries have provided the real economy with additional financing of 17 trillion yuan. The loan renewal without principal repayment has altogether provided renewal of loans 4.4 trillion yuan since last September. Short-term export credit insurance has increased its coverage amount by 15.3%, providing strong support for stabilizing foreign trade. For the first 4 months, the payout of insurance was 1 trillion yuan, and the car insurances for new energy vehicles covered more than 10 million cars. And at the same time, the long-term reserve have exceeded 10 trillion in terms of elderly care and health insurance. Next, we will follow the instructions of the Party Central Committee and the State Council, increase the sense of responsibility, urgency, and initiative, step up efforts to implement the existing policies, and step up efforts to roll out additional policies to further cement the fundamentals of economic recovery. Recently, we will roll out the following 8 additional policies. First, a series of financing system that is commensurate with the new development model of the housing sector to facilitate the stabilizing of the housing sector. Second, will further expand the pilot of long-term investment of insurance funds to increase more funds for the market. Third, adjust and improve the regulatory rules and lower the risks of insurance funds investment. We'll support efforts to stabilize and activate the capital market. Fourth, we will accelerate the rolling out of package policies supporting micro and small enterprises and private sector financing, substantiate the working mechanism to help stabilize enterprises and the economy. Fifth, will roll out a series of measures to support the banking and insurance industries. For entities affected by tariffs, we will provide targeted service to help them with operation and exploration of market. Sixth, merger loans management rules will be rolled out. And seventh, we will extend the entities that launch financial asset investment companies to eligible nationwide commercial banks and support investment to SDI companies. And eighth, formulate opinions on the high-quality development of sci-tech insurance and better leverage the role of insurance of risk-sharing and compensation. Thank you. Thank you, Minister Li. Now I'll give the floor to Mr. Wu Qing.
Ladies and gentlemen, friends from media, good morning. First of all, I'd like to say thank you to your support and long-term support and attention for the work of China Securities Regulatory Commission, CSRC, and capital market. I have to say, your understanding and support is very important for us. Since last year, we have been implementing the plans and decisions of Party Central Committee and State Council, implement the new 9 guidelines and a series of policy frameworks. The momentum of the market is good now. Since the beginning of April, the U.S. government's tariff policy has impacted the economic and trade order of the world, brought turbulence to international financial market, which give us pressure to domestic financial market, facing the sudden and severe challenge under the able leadership of Central Committee, State Council, and the coordination of the Central Financial Commission. We made swift action with relevant authority and introduced coordinated measures from the perspective of capital fund and expectations, including the People's Bank of China, State-owned Assets Supervision Administration Commission, and State Administration of Foreign Exchanges has released strong policy signals. The Central Huijin Investment Limited galvanized into action Social Security Fund, Security Investment Fund, institutions of bank and insurance and all kinds of other investors has consolidated their confidence and bought in more stocks, and a lot of listed companies repurchased shares and increased the equity stake to maintain the stability of the stock price. With the common effort of the participant, of investors and entities of market, the China A index has experienced a short period of turbulence, which is just one day, and then it rebounded and gained good momentum and demonstrated strong resilience and capability of risk resistance. In the April 25 Central Political Bureau meeting has emphasized on maintaining the stability and vitality of the capital market, which embodies Central Committee's expectations to our work in stabilizing the market, and we will unswervingly manage our country's own affairs well, ensuring stability in the operation of market as well as to make progress in stimulating the vitality of the market and making the market assume its role. The first is to consolidate the good momentum of the market, enhance the monitoring supervision of the market, and the comprehensive judgment of the risk, dynamically enhance our work plans against the external shocks, and support the Central Huijin Investment Limited to assume its role in stabilizing the fund. It's safe to say that the Huijin Investment Limited is galvanizing into action in the front, while the People's Bank of China is supporting in the back. And this is the most able, it can be said that this is the most able institution in the world when it comes to finance. Also, we will work with the PBC to improve the capital market monetary policy instruments long-term mechanism to make all the entities of a market to assume their role in stabilizing the market. Second is put focus on new quality productive forces. Recently, we will introduce deepening reform measures and policies. We will introduce the policy and measures for deepening reform of this Sci-Tech Innovation Board and Growth Enterprise Market, and enhance the adaptiveness and inclusiveness of the market structure review mechanism and investor protection. Second is to introduce a newly revised listed company material assets restructuring management plan, and regulatory guidance comes with that to make the capital market as a main channel for M&A and restructuring. Third one is to make effort in the development of Sci-Tech Innovation Bond, improve the issuance and register procedure, improve credit enhancement support to provide all-around financial services for the Sci-Tech Innovation corporations. The third point is to facilitate the mid and long-term investment. On the one hand, the returns must be ensured and continue to improve the listed company's governance and improvement of performance, and cultivate the culture of return to the investors, and implement the action plan for promotion of the high-quality development of public mutual fund, which will be released today, to embody the connection between the investors and the management companies to form a more returns, more investment, and more stable market cycle. The stability of the stock market is about the economy and society, as well as millions of investors' personal interest. Currently, the good momentum of our economy is being consolidated, and we are fully prepared in terms of policy when it comes to cope with the external shocks. Just now, Mr. Pan and Mr. Li has already introduced some policies, and we can see from that we are prepared. We will inject more certainties to a world of uncertainty, which created solid foundation and condition for our capital market's stable operation. As for the capital market, our confidence mainly comes from four aspects. The first one is the able leadership and resolute determination for maintaining stability of the market of the Central Committee and the State Council. This is not just a slogan. We have all witnessed the solid and concrete actions being made, as well as the results, tangible results. The second aspect is 1+M policy framework's implementation, which facilitated a positive and deep change in the market structure. A coordinated market ecosystem of fundraising and investment is being formed in an accelerated manner. The third aspect is the narrative, SciTech narrative. The China A index is becoming more clear. The potential of the new quality productive forces is being demonstrated. Innovation of science and technology and the industry will provide more valuable sources of development for the capital market. Fourth aspect is that the China A index is still being underestimated according to the financial industry, such as the Shanghai and Shenzhen 300 index has a 12.3 market profit rate, which is lower than major index in the world, including Standard & Poor's 500. And when the global market is facing more unstable factors, China's assets value is considered having more value and attractiveness. Let's put it in simple. Our market has a tremendous feature. It is a good market. It has good momentum for economic development, good macro policy, good institutional guarantee. Therefore, when we are putting more factors of certainty in our market against a backdrop of an uncertain environment, which is good. All in all, on the road ahead, there will always be wind and rains, be it light rain and tender wind or high waves and storms. We have the condition and confidence and capability to realize stable and sound development of China's stock market. Thank you. Thank you, Chairman Wu. Now the floor is open for questions. Before you ask questions, please notify your affiliation.
先这边吧，第3排这位女记者。对，是她。
好的，谢谢主持人。中央广播电视总台央视记者提问。刚才潘行长您提到了下一步将继续下调存款准备金率和政策利率。
CGTN, Governor Pan, you have already mentioned that you will lower the reserve requirement rate, and we all pay good attention to that. Could you further elaborate that? Thank you for your question. A monetary policy aggregate measures adjustment, or LPR, and the RRR. These kind of adjustments attract good attention from different sectors of society. Since the last Central Economic Work Conference and this year's government work report has made it clear that we will have a moderately accommodative monetary policy this year and cut the reserve requirement ratio and the interest rate at a proper time. And it has following content. The first one is adequate liquidity and have a general moderate condition for fundraising in society, including the total social financing, M2, and other macro-financial aggregates reasonable growth, and lower the fundraising cost for society. The second is we need to have a good time to introduce the policies. After fully assessment of the foreign and domestic economic and financial scenarios and the operation situation of the financial market, and have a dynamic adjustment using multiple monetary and policy instruments. The third one is that the orientation of monetary policy is a description of its state. Recent years, the People's Bank of China has cut multiple times the RRR and the interest rate, and the state is supportive. The aggregate supply is relatively accommodated. I have just released adjustment to monetary policy and measures. I would like to have further elaboration. The first one is the cut the reserve requirement ratio. This time we're cutting it by 0.5 percentage points, and which will provide long-term liquidity for about 1 trillion yuan. Cut the reserve requirement ratio can provide a more structure of liquidity and lower the liability cost of the banks and enhance the stability of banks' liability. And after we cut the 0.5 percentage points, the average RRR has been dropped from 6.6% to nowadays 6.2%. In addition, we have also temporarily lowered the vehicle financial companies and financial leasing companies RRR. Currently, it is 5%, and we're prepared to lower it to 0%. These two institutions face directly to vehicular customers and equipment trading investment. They provide financial support to these two areas. After the RRR is being cut, the credit supply will be enhanced to these two specific regions. The second one is about cutting the interest rate. There are three contents in this. The first one is to lower the policy interest rate by 0.1 percentage point. The policy interest rate means that in our interest rate system, it means the 7-day reverse repo operation interest rate in the open market. Currently, it is 1.5%, and we adjust it to 1.4%. Through the market-based interest rate transmission, it is estimated that the LPR will lower by 0.1 percentage point. We will also guide the commercial banks to lower their savings interest rate through self-regulatory mechanism. The second point is lower the interest rates of structural monetary policy instrument by 0.25 percentage points. It is the loans provided by the central bank to the commercial banks. Every year it can save about 15 to 20 billion yuan every year for banks, which will facilitate the bank's support in economic structural transformation. The third one is to lower the individual housing accumulation fund loan interest by 0.25 percentage points, among which the interest rate for first-time home buyers loans over 5 years will drop from 2.85% to 2.6%. And the other length of period of interest rate will be adjusted in a synchronized way. It is estimated that it will save over 20 billion yuan for the residents' loans of the housing accumulating fund. It will support the rigid housing demand. It will also facilitate the stabilization and recovery of the real estate market. In addition, the People's Bank of China will improve the monetary policy framework, enhance the execution and monitoring of the interest rate policy. For those unreasonable market practices that will undermine the transmission of monetary policy, we will enhance the regulation so that the transmission mechanism will be more smooth and allocation of resources will be more effective. The said measures will provide considerable low-cost mid- and long-term fund and will lower the cost of liabilities to financial institutions, stabilize net interest margin. This will also transmit it into the real economy and lower the funding cost, raise the confidence of the market, and support the stable growth of real economy.
好，第一排吧。
感谢主持人。21世纪经济报道记者提问：请问吴主席，加征关税可能对 A 股上市公司
21st Century News, Chairman Wu, how will imposing tariff affect the A-listed companies' operation and how will CSRC cope with that? Thank you for your question. For the impact of the tariff. Recently, many listed companies in China A index made disclosures through announcements and earnings conferences. Generally speaking, the abuse of tariff have severe impact on the global economy and trade order. The listed companies will inevitably be directly or indirectly affected, and some will have more impact from this, some will have less impact from this. Some companies have a larger proportion of export to America in their income will endure bigger impact. But just like General Secretary Xi Jinping has pointed out that China's economy is a large ocean instead of a small pond. The listed company in China A index as excellent representations of China's corporations. They have good resilience and capability of adjustment. The mega-sized domestic demand and potential demand is where our confidence comes from. 90% of the income of the listed companies in China A index comes from China. China's economy has good momentum in a long-term perspective, which means the performance outlook of these listed companies will be good. In 2024, 3/4 of the listed companies have profit and 50% of them have witnessed an increase in their profit, especially the sci-tech industrial opportunities led by AI, making the semiconductors and consumer electronics has realized a growth of 13.2% and 12.9% respectively. Meanwhile, the whole market dividend and repurchase has made record high, and the Shanghai and the Shenzhen 300 index dividend yield has reached 3.6%. In the first quarter of this year, the net profit of the listed companies has witnessed a 3.6% growth, among which the real economy listed company are witnessing a 4.3% increase compared with the same period last year. Secondly, we have made progress in building a diversified export market. Since the United States imposed a tariff on us in 2018, the listed companies in China A index has been adjusting their overseas production capacity scheme and open up new markets. Export income has increased from 4.9 trillion yuan in 2018 to 9.4 trillion yuan in 2024, which is a 92% increase. In the meantime, the income from the direct exports to the United States has dropped proportionately. 91% of the companies has lower 10% of their incomes from the exports to the United States. Third is we have more competitiveness in exporting. Made in China has deeply engraved into the global industrial and supply chain. The 8 listed companies in China Index has stability in product quality, economies of scale, and innovation in technology. Therefore, they have stronger comparative advantage in competition. Since April 7, there are more than 350 companies have disclosed the plan for repurchase and increase in their stake, which demonstrated their confidence in their own value and the outlook for their own development. The listed companies are important component of China's economy and cornerstones of the capital market. The next step, we will enhance the capital market to assume its role, strengthen regulation while conveying its warmth, help those companies impacted by the imposing of tariffs. First is to make more outreaches and assistances. Since last year to the end of this March, with local government, our commission have made outreach to 2,352 listed companies and solved 3,300 of problems for them, and we will continue doing that. Secondly, improve supervision arrangements. For those companies hugely affected by the tariff policies, we will have more inclusiveness in supervision when it comes to equity pledge, refinancing, and fundraising to help them ease their problems. We will also improve the exemption rules for information disclosure and to guide the listed companies to enhance effective communications with the investors. Third, support the upgrade and transformation of the listed companies, especially the upgrade and transformation through M&A and restructuring. Last year, we have 6 guidelines for M&A, and the restructuring projects in Shanghai and Shenzhen stock market that is disclosed has reached nearly 1,400, which is a 40% growth, among which material assets restructuring is over 160, which has increased 2.4 times. We're also revising the listed companies' material assets restructuring management plan to have more support for their M&A and restructuring. We will focus on the industrial logic, stimulate the vitality, enhance the quality, and enhance our capability in innovation and risk resistance. Fourth, we will provide service and support for multiple capital markets, supporting them to carry out direct fundraising through multiple instruments, including stocks and bonds, and encourage the company that meets the criteria to be listed overseas to enhance their capabilities in opening our market. Thank you very much.
中间这位，对。
谢谢主持人。经济日报记者提问。
Economic Daily. The stock market and the real estate sector are important parameters of economic performance. And what has the NFRA done to keep them stable, and what are your considerations? Thank you for your question. Stabilizing the real estate sector and the stock market means a lot to boosting social expectations and ensuring smooth circulation of domestic demand. The Political Bureau meeting on April the 25th again made specific requirements in this regard. The NFRA firmly implements the instructions of the CPC Central Committee and the State Council and strives to put in place the right policy mix in this regard. To keep the real estate sector stable, we have taken solid steps to expand the urban real estate financing coordination mechanism and improve its efficiency, to support efforts to ensure timely delivery of housing projects. Whitelist loans approved by commercial banks have reached 6.7 trillion yuan now, supporting the construction and delivery of over 16 million units of housing, which protected the lawful rights and interests of home buyers and supported efforts to stem the downturn and restore stability in the real estate market. Positive changes are also shown in credit data in Q1. In Q1, over 750 billion yuan of home loans were added, among which the increase in personal housing loans were the biggest quarterly increase since 2022. Housing rental loans grew 28% year-on-year, and recently some top-level international investment institutions who came to China also believe that China's real estate sector is presenting more investment value. Going forward, we will improve the various financing mechanisms to match the new developments in the real estate sector, including the loan management for real estate development, personal housing, urban renovation, guide financial institutions to keep real estate financing stable, effectively meet essential housing needs and demand for better housing, step up funding support for high-quality housing supply, and actively support urban renovation in order to help further consolidate the trend toward greater stability in the real estate market. In terms of stabilizing the stock market, we have fully leveraged insurance funds' strength as patient and long-term capital to increase their market participation and keep the market stable. First, we carried out an insurance funds long-term investment reform pilot program to provide more funds to the stock market. Last month, we raised the cap on the investment share of insurance funds' equity assets to further release investment space. Next step, we will introduce several specific measures to continuously support efforts to stabilize and stimulate capital markets. First, we will expand the scope of the insurance fund's long-term investment reform pilot program. We plan to approve an additional 60 billion yuan in the coming period to add more funds to the market. Second, we will adjust the regulatory rules for solvency capabilities, lower the risk factor of stock investment by 10%, and encourage insurance companies' market participation. Third, we will improve the long-term assessment mechanism to encourage the enthusiasm of institutions and promote long-term investment of long-term capital. Thank you.
谢谢主持人。第一财经记者提问：刚才潘行长提到将创设并加力实施结构性货币政策工具，这些结构性工具将对经济结构调整产生积极作用。能否请您再详细介绍一下
？Step up structural monetary policy tools, which will be significant. So could you please brief us more on that? Thank you. Traditionally, monetary policies are mainly aggregate tools. But in China's economic operation, as you are well aware, many challenges are structural in nature. So if the structure is not well adjusted, then the adjustment of aggregate cannot play an effective role. So structural monetary policy tools will help solve some structural issues and challenges. Over the years, the PBOC has continued to explore, and we follow the principle of focusing on key areas, being moderate and appropriate, and advancing and retreating. And we have established many structural monetary policy tools. And so far, we have put in place a framework of monetary policy adjustment with aggregate tools as the mainstay and structural tools as the supplement. By the end of April, There are altogether 9 structural monetary policy tools. They mainly focus on the key areas of the national economy, major strategies, and weak links. The remainder of these tools is about 5.9 trillion yuan, accounting for 13% of the PBOC's balance sheet, which stands at an appropriate level. The structural monetary policy tools are known as relending facilities. They refer to the loans provided by the central banks to financial institutions. With internal incentives, they will guide financial institutions to follow commercial rules to issue voluntarily loans to market entities. In recent years, with the guidance of structural monetary policy tools, the structure of credit allocation of financial institutions has fundamentally changed. You may be well aware that in the balance sheet of commercial banks, in the past years, there are large windows for the real estate sector and local government debt. And in recent years, this window has been narrowing down. So the financial sector's support for the real economy has become significantly more robust, adaptive, and targeted. This time, we have launched and stepped up a series of structural monetary policy tools. There are additions in quantity and discounts in prices, and that will help these policy tools to better play their guiding role. First, the interest rate of these policy tools will be lowered by 0.25 percentage points. This time, the relending facilities supporting agriculture and micro and small enterprises, the relending for SDI and tech transformation, carbon emission reduction supportive tools, and so on. These interest rates will be lowered from 1.75% to 1.5%. And also, the PSL for policy financial institutions will be lowered from 2.25% to 2%. Second, we will establish a 500 billion yuan relending facility for service consumption and elderly care. Currently, China's economy has a focus in boosting domestic demand and boosting consumption. And the services consumption is a major part in boosting consumption. So in this regard, the PBOC has established relending facilities for service consumption and elderly care to guide financial institutions to step up financial support for accommodation, catering, culture, entertainment, education, and so on, as well as the elderly care industry. They will also be coordinated with fiscal and other policies to better serve the need for consumption upgrading. This is a new measure of the PBOC to support boosting consumption, and the value will stand at 500 billion yuan. And third, the relending facility for SDI and tech transformation will be increased from 500 billion to 800 billion. This tool was launched in April last year by the PBOC and the NDRC and the Ministry of Science and Technology. The initial value was 500 billion, and it has significantly supported these SMEs and key areas in transforming technology and upgrading equipment. And this time, this value will be increased to 800 billion to support large-scale equipment upgrading. And fourth, the relending facilities for agriculture and SMEs will be increased by 300 billion. And so altogether, it will stand at 3 trillion. Combined with this round of rate cut, there will be a combined effect of quantity and price. And commercial banks will be supported to provide more loans to, in particular, agriculture, small and micro companies, and so on. And in the future, in light of the effects of these tools, we may as well expand the tools, improve policy elements, or introduce new policy tools. Thank you.
好，这边第2排，靠边上那位女记者，对。
谢谢。香港南华早报提问，在中美贸易冲突的背景下，对于对外贸依存度比较高的企业，除了之前说的不断代不抽。
In addition to avoiding low withdrawals and terminations to support relevant companies reliant on foreign trade, are there other remedies, and what are the specific supporting measures for small and micro enterprises in the context of rising trade tensions between China and the United States? Thank you. In recent years, we have continuously deepened the structural reform of the financial supply, guided banks and insurance companies to improve the adaptability of their services, and encouraged them to develop differentiated, customized products to better meet the financial needs of enterprises of different sizes and types. Particularly, to address the financing difficulties facing small and micro businesses and private enterprises, we have established a special financing coordination mechanism to help channel low-cost funds directly to enterprises. Currently, we have visited over 67 million market entities and issued 12.6 trillion yuan of loans, one-third of which were credit loans. In the coming period, the NFRA will work with relevant departments to roll out a package of policies to support small and micro enterprises in terms of financing, with a focus on the following 5 dimensions. First, increasing supply. We will continue to deepen the financing coordination mechanism, visit and engage more market entities, increase the issuance of first-time loans, loan renewals and credit loans, and see that inclusive loans to small and micro enterprises grow faster than average growth of all loans. Second, reducing costs. We will timely transmit the dividends of market interest rates and preferential policies regarding funds transfer pricing, regulate the cooperation between financial institutions and third parties, promote a steady decline of overall financing cost, and further reduce burdens on businesses. Third, enhancing efficiency. We will encourage banks to simplify domestic internal procedures, expedite loan issuance, adaptively meet various financing needs, and alleviate cash flow pressure on enterprises. Fourth, improving the environment. We will strengthen coordination and synergy between monetary, fiscal, taxation, industrial, and regulatory policies, and improve relevant systems and institutions on collateral credit enhancement, credit repair, and categorization standards, so as to foster a more friendly environment for businesses. Facing heightened external shocks, we will implement special initiatives to encourage banks and insurance companies to support foreign trade companies, to step up financial support through market and law-based means. First, strengthening financial relief. We will expand the coordination mechanism to all foreign trade companies and encourage banks to implement various policies to stabilize foreign trade to ensure that all eligible loans are granted and renewed. Tailor-made services will be provided to market entities that are hit hard by tariffs and face temporary difficulties. Second, intensifying efforts to keep export stable. We will improve the regulatory policy for export credit insurance, increase insurance companies' ability to provide insurance, provide preferential rates, speed up compensation payment, and pay compensation in advance so as to stabilize exporters' confidence in taking orders and exporting products. We will compel institutions to provide sound financial services to cross-border e-commerce and overseas warehouses and other key areas, support the development of customized insurance products, and guide banks to provide integrated services to support new forms of business in foreign trade. Third, facilitating domestic sales of export products. We will strengthen the financing safeguards for exporters to sell products originally produced for export. In the domestic market, we will guide the establishment of insurance union schemes for such trade, roll out specialized products, and expand the scope and compensation of such insurance. We will take multiple measures to help boost consumption and expand domestic demand so as to create more market space for exporters and support the integrated development of domestic and foreign trade. Thank you.
Thank you. Market News International. Amid current volatility in international trade relations, concerns are rising over the tensions spreading into financial and other sectors. Will this have an impact on the opening up of China's capital markets? And what measures is the China Securities Regulatory Commission considering in response? Thank you.
好，请翻译一下。
美国国际市场新闻社，我的问题提给吴清主席。当前国际形势，特别是贸易形势复杂多变，市场对贸易战以及贸易紧张局势可能蔓延至金融等领域的担忧上升。请问这是否会对中国资本市场的对外开放产生影响？中国证监会考虑采取何种措施应对？谢谢。
好，非常谢谢您的提问啊。
Thank you for your question. Opening up is a fundamental national policy of China. It's also a requirement for the high-quality development of the capital market. In recent years, the CSRC has earnestly implemented the important decisions of the Party Central Committee on pursuing high-standard opening up and promoting high-standard opening up of the financial sector. We have actively and prudently promoted the comprehensive two-way opening up of the market, product, and institution, and continue to facilitate foreign capital's participation in domestic market, and improved the system on QFII, steadily expanded cross-border connectivity, removed all the strict restrictions to foreign equity ratio, and improved the overseas listing filing efficiency, etc. So on. So far, the foreign assets and foreign capital and financial institution have become a major actor in the A-share market, and through QFII and the Shanghai and Shenzhen Stock Connect, foreign capital has a total holding of around 3 trillion yuan of the A-share floating market value. Despite the changing external environment, in particular the international economic and trade situation, China's strategic direction of a high-quality economic development is clear and resolute. The stability and predictability of macro policies have further increased, in particular the timely adjustments, like Governor Pan just said. These have further increased the confidence of foreign capital in participating in China's capital market. And recently we are seeing that many foreign capital institutions have raised their rating for China's stock market, and they have been investigating listed companies of the A-share and following closely and speaking positively of China's stock market and the capital market. Just like General Secretary Xi Jinping said, to invest in China is to invest in the future. And next, the CSRC will resolutely implement the high-quality opening up of the capital market, further improve the landscape of opening up, and roll out a series of practical measures to promote opening up. First, we will continue to expand institutional opening up. We will further improve the services for QFII access, and we will increase the efficiency in qualification, approval, and account opening, expand investment. We will support eligible institutions to apply for the license of securities and funds, investment and consulting, and encourage overseas investment institutions to establish RMB funds. And second, we will further enrich the supply of products. We will open futures and options to QFIIs, support the future exchanges to enhance cooperation in the authorization of the commodity futures settlement prices. We will deepen exchange bond market opening up and include REITs into Shanghai, Hong Kong, and Shenzhen, Hong Kong Stock Connect. Third, we will deepen market opening up. we will improve the overseas listing filing and their mechanism, procedures, and elements, and improve their efficiency and effectiveness. We will further support Shanghai in building an international financial center and cementing Hong Kong as an international financial center. We will promote the inclusion of RMB stock trading counter in the Hong Kong Stock Connect and support more measures to cooperate with the Hong Kong markets. And fourth, we will further strengthen regulatory cooperation bilaterally and multilaterally. We will actively shape a stable, transparent, and predictable regulatory environment. We will further strengthen cooperation between security regulation and auditing regulation and safeguard the legitimate rights of enterprises overseas in the overseas markets. We will also create conditions to support high-quality China concept stocks to return to the mainland and Hong Kong stock markets. At the same time, we will provide and protect the legitimate rights of investors. Thank you.
好，这边第3排，对，这边。
谢谢主持人。金融时报记者提问。
Recently, the NFRA rolled out several pilot measures to support sci-tech innovation, and in April, together with several departments, released the implementation plan for high-quality development of technology finance in the banking and insurance industries. How are things going with these policies, and what supportive measures will be taken in the future? Thank you for your question. Developing technology finance is the sure way to promote in-depth integration between sci-tech innovation and industrial innovation. We have continuously encouraged banks and insurance firms to step up support for technology finance and explore new pathways in this area. Up until now, loans granted to high-tech companies grow nearly 3 times faster than average, and sci-tech insurance has covered nearly 2 trillion yuan. Positive progress has been made in the various pilot policies we have introduced. The pilot program for equity investments by financial asset management companies has been expanded. The scale of contracted funds exceeded 380 billion yuan. Mergers and acquisition loans for tech firms are well underway as the first loans in the 18 pilot cities were all granted. The intellectual property finance ecosystem pilots are moving forward steadily. Service platforms were established in multiple places, and efforts were made to address difficulties in the registration for pledge and assessments and handling. Sci-tech insurance service models are being improved, and the compensation mechanism for the first equipment and first batch of materials have been improved. The first commercial aerospace insurance union was established in Beijing at the end of March, which is a common practice. That is, several insurance companies to share the risks for aerospace companies, especially for emerging industries with high uncertainties. It is a useful instrument for risk sharing. Going forward, we will deepen existing pilot programs, explore new models, improve the technology finance mechanism that matches the needs of sci-tech innovation, and promote the development of new quality productive forces. First, improving credit services. We will work to establish a special mechanism for credit support of sci-tech innovation, support banks in establishing specialized entities for technology finance, and encourage explorations in long-term assessment of sci-tech loans. We are recently revising the M&A loan management methods, which will be rolled out as soon as possible to further unleash the potential and promote faster industrial transformation and upgrading. Second, strengthening insurance protection. We will formulate the opinions on high-quality development of sci-tech insurance as soon as possible so that it will better play the role in risk sharing and compensation. We will support more insurance unions in facilitating major technological breakthroughs and encourage more insurance products in robotics, R&D, and low-altitude aircraft and other emerging fields to better facilitate the innovation and development of enterprises. Third, expanding equity investment. We will encourage insurance funds to actively participate in startup investment according to market principles and carry out, in an orderly manner, major equity investment to unlisted sci-tech firms. We support eligible national commercial banks in setting up financial asset management companies, and in recent days we will issue approvals. Actually, we are approving one today to increase investment into sci-tech companies. Thank you.
好，继续提问。好，这边吧。
谢谢发言人。每日经济新闻记者提问：刚刚潘行长也提到，去年4季度央行推出了2项支持资本市场的货币政策工具。
In Q4 last year, the PBOC launched 2 monetary policy tools to support the capital market. So how are they going over the past half year? And what measures will be taken next? Thank you. Thank you. Last year, the PBOC and the CSRC and NFRA launched 2 monetary policy tools supporting the capital market. And also last September, we published these tools. Their initial value was 500 and 300 billion yuan, respectively. After the launch of these tools, they have adapted to market demand and welcomed by the market, playing an important role of boosting investor confidence, improving financial market expectations, and strengthening the internal stability of the capital market. These tools are designed fully in line with market principles. They can provide important support for listed companies to manage assets by repurchasing of shares and increasing holdings. The swap facility enhances the asset obtainment abilities of market entities, and the reloans for share buybacks and holding increases provide low-cost capital for commercial banks issuing loans. The participating entities can voluntarily decide on the time and scale of share purchasing. And so far, swap facility has operated twice with a total value of 105 billion. And since last September, when it was launched, more than 500 listed companies and major shareholders have used the tools to buy back shares with a total loan value of about 300 billion yuan. All these 2 tools are in nature countercyclical adjustment tools and playing a floor support role. So when the capital market is significantly underestimated, securities institutions and listed companies as well as major shareholders will be more willing to use the low-cost capital provided by the 2 tools to buy stocks so that they can stop the negative cycle of a weak market. For instance, in last November, around New Year's Day this year, and in early last April, when the U.S. abuse of tariffs caused impacts, we can see that the use of swap facility saw a significant rise, and listed companies were active in using buyback and shareholding increases. So this kind of internal stabilizing mechanism has played the role of these 2 tools in recalibrating the capital market and stabilizing market expectations. In implementing the policies, the PBOC and the CSRC and the NFRA have summarized the experiences. I have talked many times with Mr. Wu Qing on these topics, and in particular on these 2 tools. With the suggestions from different communities, we have continued to improve the policy elements and make sure that the policies are more effective. First, we have combined the total value of 800 billion, combining the values, not the tools. So when they are combined, all the tools can be used and they can be more convenient and flexible, and they are more flexible to meet the different needs of different institutions. The second, in terms of swap facility, the scope of participating institutions have increased from 20 to 40. And the collateral has included the Hong Kong stock share and restricted shares. We have also guided the financial infrastructure to lower the standards on business fees. And third, in terms of buyback and holding increases, the maximum duration of loans has been extended from 1 year to 3 years. We encourage banks to issue credit loans. And the requirement of listed companies' share of own funds has lowered from 30% to 10%. And we have also included China Chengtong shareholding and China Reform Holding into the supporting scope. These two companies have announced a planned use of capital totaling at 180 billion yuan to increase the holding of the stocks of listed companies. In addition, the central Huijin investment is also an important strategic force to stabilize the capital market. The PBOC supports Huijin to step up its holding of stock market index fund when necessary, and we will promote adequate relending support to it to firmly stabilize the capital market. Thank you.
好，这边最边上那位男记者，对。
谢谢主持人。新华社新华财经记者提问，我的问题提给吴清主席。您刚才提到推动公募基金高端发展行动方案。
Question for Chairman Wu. You have just mentioned about the action plan, where we are at on this, and what influence will it have on the capital market?
谢谢您的提问啊。
Thank you for your question.
这个其实，在今年的1月份和3月份的2次性发布会
On the two press conferences in January and March, when talking about the investment from the mid and long-term capitals, I have briefly introduced the basic approach of the reform of mutual fund. Since the September 26th Political Bureau meeting, our commission has been implementing the plans for reform of facilitation, the reform of mutual fund, and carried out over 30 times of survey and researches, and focused on the suggestions and advices from the investors and institutions, especially put emphasis on the problems encountered by many investors and come up with an action plan. The action plan is ready. And today, we will release it, and it will come into force. And I have already introduced the basic approach, and for specific details, you can look it up on the internet. And this is a major reform measure. Which leads to the topic has been very popular among the industries. I don't know whether you have came from Omaha, went to Omaha recently. Many investors has listened to Buffett's speech. He's a respected investor, and this year he will retire. But I believe the most important lesson learned from him is the value investment, long-term investment, reasonable investment, and repay the investors. These concepts will not retire, will not leave the stage either. And this is where we aim in this reform. After he retired, I think this age calls for a new great investor. Our market has a lot of enterprises and entrepreneurs, and we believe there will be some excellent investors and investment institutes, maybe not just one or two. as excellent as him, but there will be good investment teams and institutions formed in our market, and this requires some important regulations to facilitate good investment institutes and investors. And the emphasis of this reform are following. The first one is to highlight the connection with the investors. We put focus on the reform of the pattern of fund management companies and make the industry turn to the origin of manage the assets under the mandate and actively manage equity fund. Charging pattern will be improved. Lesser performance must mean less commission. Through performance-based charging mechanism, we need to change the phenomenon of fund management companies' guaranteed profit regardless of performance. In addition, incorporate indicators that directly affect the investors' interests, such as whether the performance beats the benchmark and the profit and loss situation of the investors into the evaluation system of fund companies and fund managers, to urge the fund companies to shift from emphasis on scale to emphasize on returns. In addition, increase the proportion of bonuses that the fund company executives and fund managers are required to invest in their own products and extend the lock-up period so that these key minorities are more aligned with the interest of investors. The second one is to enhance the stability of fund investment practices. There are misleading practices. To solve these problems, we ask to set a clear performance comparison benchmark as the ruler that judges the actual performance of the products to avoid the investment practice to be averted from its name, to make sure what you see is what you get for the investors. Meanwhile, to build a long-term investment, to build an enabling environment for long-term investment, we will improve the regulatory and stimulation mechanism for the regulatory authorities, self-regulatory organizations, rating institutes, and companies themselves to have a long-term evaluation for these fund management companies. And we made it clear that the over 3 years evaluation proportion is no less than 80% to reduce the buy-high silo phenomena and increase the long-term profits for their products. The third one is to improve the service capability for the investors, to guide the fund management company and sales agency to have better allocation of resources among the investment research, product design, and risk management to have better service, to provide better service for the investors, and provide suitable investment portfolio for the investors by introduce the regulations as well as introduce the institution as well as the direct sales platform for the institutional investors. The fourth is the orientation of equity fund. It can create unique values for the investors. Since last September, the equity fund has grown from 7 trillion yuan to nowadays 8.3 trillion yuan. And next, we will enhance our supervision and guidance, improve the rating and classification mechanism for the fund management companies and sales agencies, as well as facilitate the issuance and sales of the equity fund to enrich the fund products, including index fund and actively managed fund that suits the development of country, as well as inducive to create long-term return for the investors. On the basis of 5 workday speed registration of ETF, we will urge them to enhance the registration speed for equity fund and other funds that meet this criteria. We believe with the implementation of these reform plans, the mutual fund will be more investors' interest-oriented, and the sense of gains of the investors will be stronger. Thank you.
好，请继续提问。好，时间关系，发布会已经进行快85分钟了。那我们最后一道问题。
We are almost 85 minutes in. Now, so last question.
对。
好，谢谢凤凰卫视提问。潘行长，今年两会记者
Governor
会
Pan,
上您
at the
提到
press
要
conference
创新
during
推
this
出
year's two
债券
sessions, you
市场
talked
的
about
科技
rolling
版。
out
请问相关工
of
作进
a
展如
SciTech
何？另外，
board
刚
in
才
the
您
bond
也
market.
宣布
So how
要
is
创
this
设
going?
科技
And you
创
just
新
now
债券风险
announced
分
the
担工具，
establishment of
请
a
问有何
SciTech
考虑？
innovation
谢
bond
谢。
risk-sharing instrument. That sounds rather technical. Could you elaborate on it?
科技创新相适应的科技金融体
Building a SciTech finance mechanism that meets the needs of SciTech innovation is an important way for financial services sectors to serve high-quality development of the real economy and an important part of deepening financial supply-side structural reform. In recent years, the PBC, together with relevant departments, made use of credit, bond, equity, insurance, and other instruments to step up financial support for SciTech innovation. We've done a lot and gained some experience. Just now, Mr. Wu Qing and Mr. Li Yunze also talked about this. Previously, the PBC, together with the CSRC, NFRA, and the Ministry of Science and Technology, was preparing the rollout of a SciTech board in the bond market to support three types of entities, including financial institutions, SciTech companies, and equity investment institutions, to issue SciTech innovation bonds. And in light of the features of SciTech companies, we are improving the institutional arrangements on the issuance, transaction information disclosure, and credit ratings for SciTech innovation bonds, and improve the supporting rules systems that match the needs of SciTech financing. Relevant policy is ready, largely ready, and so far market entities have responded very actively. Various types of financial institutions, SciTech companies, and equity investment institutions have communicated with the PBC and CSRC and expressed their intent to issue such bonds. Nearly 100 market entities plan to issue over 300 billion yuan of SciTech innovation bonds, and we expect more institutions in the future. To support equity investment institutions in issuing long-term bond on the SciTech board, the PBC, together with the CSRC, draws on the experience of the private enterprise bond financing support instrument established in 2018. We are establishing a SciTech innovation bond risk-sharing instrument. You know that equity investment institutions play an important role in supporting SciTech innovation, in particular in promoting the formation of capital. Equity investment institutions participated and supported nearly 90% of the companies listed on the Science and Technology Innovation Board and 60% of the companies listed on the Growth Enterprises market. But these institutions do not issue a lot of bonds, and the bonds issued by them alone are likely to be short-term and at high costs. The SciTech Innovation Bond Risk-Sharing Instrument draws on the experience of the second arrow. The PBC will provide low-cost real loan funds, which can be used to purchase SciTech innovation bonds, and together with local governments, market-based credit enhancement institutions, we are taking diverse credit enhancement measures to share the default loss risk of bond investors, which will effectively reduce the bond financing costs for equity investment institutions and support them in issuing longer-term bonds such as 8-year bonds or 10-year bonds. Previously, in the process of formulating relevant policies, we invited a number of representatives of equity investment institutions, including PE, to hear their views. They have contributed a lot of insights and policy recommendations, and they expressed great expectations for this policy. The bond market SciTech board and risk-sharing instruments will help further expand the financing channels for SciTech companies and equity investment institutions, and will also help further stimulate market vitality and confidence, attract more social capital into the area of science and technology innovation, and encourage private equity finance markets to enter into a mutually reinforcing cycle with stock markets. Thank you. Thank you, our speakers, and thank you, everyone. This is the end of today's press briefing.
You're just watching the live pictures here in Beijing, where Chinese authorities briefed the media on the latest financial policies to stabilize the market. And here's some key takeaways. China will roll out measures to stabilize housing market and improve regulations to activate capital markets. And the PBOC will also put in place 9 structural monetary policy tools to stabilize the areas of the economy. Joining us for some analysis is Mr. Qu Qiang, Fellow of the Belt and Road Research Center at Minzu University of China in Beijing. Mr. Qi, the central bank will cut the reserve requirement ratio by 0.5 percentage points, releasing about 1 trillion in long-term liquidity, and lower the policy interest rate by 0.1 percentage points. So what potential impact would this have on China's economy, financial markets, and the monetary policy direction in the coming months?
Well, I think this is very important, the micro financial regulation policies towards Chinese financial market, as well as for the real economy. First of all, we've been cutting the 50 basis point, the triple R, and also lowering 10 basis point in the LPR. I think it's a major signal sending out very loud towards the market, showing us that we want to put back the stability and also the confidence into the market by lowering the triple R and also the LPR. And I think we're going to have ample liquidity towards the bond market. So I think stability for the bond market is very important towards the current economic transformation and upgrading of technologies of the real economy in China. And also, I think another important confidence will be conveyed towards the stock market. Recently, I think we have already been doing a lot of the bazooka combos of the policy towards the stock market ever since the end of last year. But also, I think these confidence will be continuous to convey toward the market. So we think with all these efficiencies of the policies, we've been upgraded our bottom line for the stock market from 2,700 points to currently 3,300 points. So it shows that the first round of stabilization has already been completed. But also with the continuity of these confidence in the policies, I think we will raise up the bar for the stock market to even higher. And also in the longer run, I think current backdrop, I think everybody has already been understanding, is that the international trade conflicts have been continuing, and also international financial turmoil has been continuing. So we need more of the domestic policy to support Chinese real economy, for example, like technology development, for example, like the real estate market, as well as for the local government bond. And all these can be solved through today's, microeconomic, situation and also policies. So I think that's the reason why we're going to have these policies and been announced through today's conference.
And authorities will also increase the real lending quota for science-tech innovation and technological transformation by 300 billion yuan. How significant is this in accelerating China's technological self-reliance amid current tariff tensions?
Well, yeah, I think the central leadership fully understands the real situation, what's going on recently. Well, with the trade conflict, I don't think the labor-intensive products or certain, rising of the prices is a real problem, but the technology sanctions or the shutting down of the supply chain surrounding the technology industry would be the real problem in the future. That's the reason why, more than ever, we would have to stand up on our own feet and also to strengthen our own reliances on our own technologies, to develop our own, IP independently. So I think this is the moment we really need to support those technology-savvy companies. But here's the problem. Technology-savvy companies, they usually started from the garage, starting from a very smaller size. That's the reason why in China we have what we call the little giant or other, supplying or this kind of supportive, mechanism to support those companies to develop. But the problem for them is that they sometimes cannot get ample funding For example, the small companies do not have enough collateralizations without fixed assets, without more of the supporting mechanisms. They probably wouldn't lend more of the money from the banks, and that will just stop them from growing. I think that's the reason why we've been providing the special purpose, the facility, to support these tech-savvy companies and these startups, by giving them the special-oriented bond, and also to help them to provide them the collateralization from the angle of the central bank, so that in the future we can seize the commanding height of the high-tech industry, and meanwhile to make us more resilient and more stable in a supply chain.
This press conference lasted about 1 hour and a half, pretty long time, and lots of questions have been raised and lots of issues have been discussed. What other measures announced at this news conference that was highlighting?
Well, I think we can break it down the whole measure package into just two perspectives. Number one, we'll call the general policies. For example, lowering the RRR and lowering the LPR. This has been talked for a very long time, but really today we have been seeing it been happening. RRR, I think, have been issuing more than 1 trillion Chinese yuan into the market. Lots of liquidity into the market will definitely support the confidence and stabilities, as well as for the LPR will lower the burden for the home buyers and also to lower the burden for the real economy. That's very, very important. But besides that, I think we have witnessed more of the special purpose, or what we call the structure tools or vehicles to support a targeted area. For example, we've been spending the money to support the home buyers, housing market, and also to support the local government, to support the SMEs, support the tech-savvy companies, and all that, and also letting alone about the agriculture technologies and etc. So all these actually has been trying to grab the whole key point in the market through the two hands. On one hand, we try to cover everybody, but on the other hand, we just don't want to put so extra liquidity to flood the market so much. But instead, we're going to use the targeted and structural way to boost up the certain important key areas, such like agriculture, technology, and small and medium-sized enterprises.
And China's Vice Premier He Lifeng will meet with the U.S. Treasury Secretary Scott Bessent during his trip to Switzerland later this week. And the Chinese Foreign Ministry says He Lifeng will be in Switzerland from May the 9th to the 12th at the invitation of the Swiss government. And he will meet with Swiss leaders. And Vice Premier He will also visit France from May the 12th to the 16th. And the Vice Premier is China's leading official for China-U.S. economic and trade affairs. The ministry says the U.S. has recently reached out several times, expressing a desire to engage in talks with China over tariff issues. And China has thoroughly assessed the situation and agreed to engage in talks. China has reiterated its stance on the tariff issue, and China will fight to the end. But the door is open for talks if the U.S. demonstrates sincerity and corrects its erroneous practices. And Beijing says any attempt by the U.S. to use talks as a cover of coercion and blackmail will not work with China. It also urged other economic entities engaged in negotiations with the U.S. to stick to its principles and uphold fairness and justice, adding that appeasement does not bring peace and compromise does not lead to respect. And Mr. Xi, as we mentioned, later this week, Chinese Vice Premier He Lifeng will hold talks with U.S. Treasury Secretary Scott Bessent in Switzerland. So what can we expect from their talks?
Well, actually, we know this is going to happen like 1 month ago. Well, very different from the story you've heard from the media of the Bloomberg or CNBC. Actually, American side actually want to approach China first, and not reversely, because we understand that from the basin perspective, this kind of the conflict is actually very bad for American economy. Just take a look at the bleeding out of American stock market. Trillions of US dollar on the capitalization has been reduced in the stock market. And also, the T-bond market for the United States is also at a very dangerous state. And meanwhile, if you take a look at the inflation rate has been bouncing back, and also the job market are showing the very clear sign of it cooling down. So all the dangerous signs are happening within just 1 or 2 weeks, as well as for the exchange rate for US dollar is also being dropped very, very ferociously in the past 3 days. So this can be a problem for the United States economy. I think more than anyone else, I think Mr. Bessent actually would like to see, this problem can be solved. That's the reason why he wants to approach to Chinese representative, talking about the tariff, talking about the trade. And vice versa for China, well, we also don't think, this kind of the tension and conflict can be good for Chinese economy. But I think that's the reason why both sides is going to meet with each other. Tariff issues is absolutely going to be covered for sure, but this is just topic one. Longer topic or more topic, probably, for example, like the T-bond market around the United States. How much would China still continue to buy American T-bond, or should we still reduce our position in this portfolio? Or how much we're going to continue to cooperate with each other on many other wider range of the economic issues that can also be affecting the Chinese and American economic growth and stability in a very longer future. And if these two countries cannot work it out, I think these instability and also this kind of the frustration probably will spill over to all over the world. Just take a look at the current international financial market, like stock, like bond, and also on foreign exchange market. Everywhere has been experiencing the turbulences, and we don't want to see that. So hopefully, finger crossed, this problem can be solved very immediately, very soon, ever since the two leaders have been meeting with each other.
And the U.S. tariffs have prompted business to stockpile imports, leading to a record U.S. trade deficit that's ballooned 14% to over $140 billion in March. And there is a 19-day pause on the U.S. reciprocal tariffs. So how sustainable is stockpiling, and what long-term impact will inventory holding have on global supply chains?
Well, I don't think this is going to continue for a very long time. Look, they tried to jump the gun when they announced this kind of a very crazy tariff conflict or tariff regime towards all the trading partners. So all the reasonable inventories, all the reasonable importers is going to stock or hoarding lots of the products, try to avoid the high inflation, high prices, or the shortage in the supply. Well, this is fine. But as long as you're doing it frequently, well, the whole supply chain will understand, hey, well, here's a problem happening with American inventory. And there is going to be lots of a shortage impulsively happening with the transportation. For example, every 1 week or every 1 month, you're going to hire, very, very large transportation capacity to ship back home lots of iPhone, lots of the groceries. So the inflation wouldn't go down. And also the supply chain will have to, take into consideration where from time to time, America have to hoard lots of extra products and the services. This is going to cause, very, very large instabilities toward the whole supply chain, as well as causing the turbulence for the pricing, mechanism globally. And also the Forex market will also suffer from it. So I think the whole world and supply chain would love to see this happening, as well as for American market itself. And eventually, they will lose people's confidence towards the U.S. dollar, towards the U.S. trade, towards America's general economic regulation policies. So I think that would have to be stopped as soon as possible. Otherwise, we're going to see much more problems, not only in America, but also for the rest of the world.
Well, thank you very much, Mr. Qu Qiang, Fellow of the Belt and Road Research Center at Minzu University of China. Thank you very much for your insights, as always. And that's it for this edition of The World Today. I'm Su Yuting in Beijing. Thank you very much for your company. I will see you soon. Stay tuned.